Hey everyone, welcome back to Corporate Decoder, the place where we dig into the financial filings that others miss. And today we have a rather interesting update from OFS Capital Corporation, or OFS that might just signal a strategic shift. So what is the big news from OFS Capital Corporation? Well, they've decided to pay back a chunk of their debt early, specifically their 4.75% notes that were due in 2026. Think of it like this: they had borrowed a certain amount of money on a loan, and now they're saying, hey, instead of waiting all the way until 2026 to pay it all back, we're going to start paying some of it back sooner. This is a pretty common move for companies when they feel financially strong and want to reduce their interest payments or perhaps free up their balance sheet for other opportunities. Now, they are doing this according to specific agreements they have in place. These are essentially the rule books for their loans. The important part here is that they have the flexibility to do this. It is not like they're being forced to pay early, but rather they're choosing to. This action is outlined in their loan agreements, which are like contracts detailing how the company and its lenders will operate. Let's get down to the numbers. OFS Capital is planning to pay back $15 million worth of these 4.75% notes. They still have about $31 million of these notes out there, so they're not paying back the whole thing, just a significant portion. This redemption is set to happen on the 30th of December of 2025. Why would they do this? Well, if they can get better terms on new debt, or if they simply have enough cash on hand to comfortably pay down this loan and save on future interest payments, then it makes good financial sense. It is like getting a big discount by paying off your credit card bill early, especially if interest rates are falling or if the company has generated a lot of profit. Now, here is how they define the payment. They will pay back exactly the amount they originally borrowed, which is 100% of the principal. On top of that, they'll also pay any interest that has accumulated up until the day before they make the big repayment. This is pretty standard for debt redemption. It just ensures that the lenders are not losing out on any interest they were rightfully owed for the period they lent the money. So what does this tell us about OFS Capital Corporation? Executing an early redemption like this often signals financial health and confidence. It suggests that the company is generating enough cash flow. They are able to meet their operational needs and still have enough surplus to pay down debt ahead of schedule. This can be seen as a positive sign for investors as it reduces the company's overall debt burden and potentially its future interest expenses. A lower debt load can make a company appear less risky to lenders and investors alike. Now, elsewhere in this filing, we see a lot of standard legal checkboxes and disclaimers. This is part of the regulatory paperwork that companies need to file. Think of it as them formally announcing their actions to the public and to the Securities and Exchange Commission. These boxes are essentially for the company to indicate if this particular filing is also serving any other official communication purposes. For the most part, these are administrative details to ensure all bases are covered from a compliance standpoint. Looking at their securities registered, we see their common stock. This is what gives people ownership shares in OFS Capital Corporation. The phrase par value is a bit of a technical term. It essentially means a very small nominal value assigned to each share of stock when it is first issued. It doesn't usually reflect the market price of the stock. The important takeaway is that they have common stock trading, which is how most investors interact with the company. They also have these 4.95% notes due in 2028. These are another form of debt that the company has issued. So besides the common stock, they've also borrowed money by issuing these notes. The 4.95% represents the annual interest rate they pay to the holders of these notes. It is a way for the company to raise capital without giving up ownership. And then we see a separate set of notes, the 7.50% notes due in 2028. This company has multiple different types of debt that it is managing. Having different interest rates and maturity dates for debt is normal. It helps companies manage their cash flow and financing costs over time. The higher interest rate on these notes compared to the 4.95% ones suggests they might have been issued at a different time or under different market conditions, or perhaps carry a different level of risk for the investors. Now, OFS Capital is checking a box here regarding whether it is an emerging growth company. This designation has specific rules under US securities law. Generally, it applies to companies with less than a certain amount of annual gross revenue. Companies that qualify as emerging growth companies can take advantage of certain exemptions and scaled disclosure requirements, which can reduce their compliance burden. It is a way for the government to provide some regulatory flexibility to newer or smaller public companies. This section of the filing is titled Other Events. This is where companies report significant developments that aren't covered by the more specific sections like financial results or executive changes. In this case, the substantial redemption of debt falls squarely into the category of other events. It is a material action that investors should be made aware of promptly. Finally, we see a mention of an exhibit and attached document that provides the actual notice of redemption for those 4.75% notes. This exhibit would contain all the formal details for the note holders. It is like the official letter announcing the repayment terms and dates. So to wrap up, OFS Capital Corporation is demonstrating financial discipline by proactively paying down a portion of its debt. This move indicates they have adequate cash flow and are strategically managing their financial obligations. It is not a dramatic shift, but rather a calculated step that suggests they are comfortable with their current financial standing and looking to optimize their capital structure by reducing interest payments and debt load earlier than required. For investors, this is generally a positive signal of a well-managed company. What is your take on this debt redemption by OFS Capital Corporation? Does this signal strength or something else? Let me know your thoughts in the comments below. If you found this breakdown helpful, give it a thumbs up and subscribe to Corporate Decoder for more in-depth financial analysis. And don't forget to join our Discord community linked in the description for even more discussions. Thanks for watching, and we'll see you in the next video.